market-determined value sitting significantly higher than that listing price. As you've heard from Ali Khan, quite a bit of optimism around this share moving forward. You've got to be happy with the kind of response this debut listing has received.
Yes, afternoon, Alishia. I think, as a listing by introduction, it was always going to be difficult to determine exactly what the market was going to do post-listing. But I think we're obviously pleased that the share price has accelerated, and I noticed Ali Khan talking as well about liquidity. I think that's a common issue in the market over here, and hopefully there will be a good churn of shares to see shareholders of the previous composite business busy unlocking value.
What's interesting, Mike, is that this demerger comes at a time when other banks are merging or buying out insurance companies and moving more so towards that bancassurance business model. So the question is, why now this move for CFC Stanbic?
Yeah, I think the business model doesn't have to be mutually exclusive if you want to be involved in bancassurance as a distribution channel. But I think when you start looking at the strategic and the management focus within the businesses, I come from a banking background, and I can assure you that there's a very different strategic and management focus that you need to bring into banking businesses versus insurance businesses. And I think that what we're trying to recognize is that by doing that and bringing Liberty as our strategic investor in the insurance businesses, we get the right level of expertise in that piece of the business versus the banking side.
In fact, that's exactly what the market's looking forward to. I mean, on whether the introduction of a strategic partner in the form of Liberty Holdings will be successful. What do you see this partnership bringing to the table?
Well, for starters, I think, as I mentioned, they're very different businesses between banking and insurance, and whilst you might have some commonalities around distribution and certain product metrics, I think the most important thing is around the new product innovation that we can tap into Liberty's expertise across the various countries that it operates in, and also realign some of the businesses. CFC and Heritage previously were both composite insurance businesses, and what we've tried to do in the last year that Liberty's been involved, and what we're focusing on, is making sure that CFC is a life business, Heritage is a short-term business, and take the various business components out of each and align them to avoid duplications and get the right kind of strategic thrust in each piece of the business.
Of course, when it comes to that insurance element, we know that there's quite a degree of underpenetration, specifically on the continent, East Africa, no different. So what kind of target do you have in mind in terms of penetrating that market and growing your market share?
Yeah, I mean, it's clearly recognized that there's a very poor penetration of insurance products overall, whether we're talking about short-term or life products in the East African region. And I think that's not so much an issue of market appetite to acquire products, but I think we've got to look at what happened in the banking business, for example, over the last 5 years, and even take an unrelated area like mobile telecoms. And as an insurance business, we've got to say to ourselves, what is the product relevance that we need to develop that will push up that penetration level? So we've got to get into the end of the market that can afford the products that we need to be able to design for them. And rather than just try and say, well, the market is underpenetrated, we've got to really be introspective and saying there's something that we are not doing right. What is it that we can do to be the next, to quote an example, Safaricom in this market?
Well, it's certainly not just your line of thinking that's going down that route. I mean, we've got other players within the sector thinking the exact same thing in terms of strategy. What's your assessment of the level of competition you're facing? Because it seems right now we've got all the insurance players getting a whole lot more innovative and aggressive.
Yes, I think we're obviously looking at the product innovation, and then there's the distribution channels, the affinities, the bancassurance that you mentioned earlier on. So I think it's a matter of doing a combination of things, but most importantly going down to the consumer level and really trying to understand exactly what it is that the consumer wants. It is a very competitive market from a perspective of number of players, and I think that's led to a market that has become more price than value addition biased. And we need to demonstrate to the consumer that this is not a grudge purchase. This is something that actually adds value to, whether it's an education process that you're doing for your children or some kind of protection for your family in the event of you not being around to earn income, etc. And that's really the key message that we need to drive through our own product development and innovation.
Well, most recently we've had results out of Kenya Re, we've had results out of Jubilee, and with those earnings coming through to the market, both those companies putting its Africa plan firmly on the agenda. What's your African plan, where one would assume, as Ali Khan highlighted earlier, that you can leverage quite a bit of that Stanbic African footprint?
Yeah, we certainly will look at the Standard Bank Stanbic Africa footprint from a bank assurance perspective in those territories where it makes sense. But I think the key element has got to be to look at each country individually and look at each one of those markets individually. For example, we might, in Kenya, we've got a short-term business. In Tanzania, we've got a short-term business. But there might be markets where short-term business doesn't make sense. We have health businesses in some and not in others. We have life businesses in some and not in others. And I think that's really also got to be a key differentiator for us. Make sure that we tap into those parts of the market and those product lines that actually make sense for the specific market. I think if one tries to have a pan-African approach of we're going to be everything everywhere, we're going to end up with a cost structure that's not sustainable for the volume of business in the individual markets.